Let's get back to the markets and bring in JF Tardif, founder and portfolio manager at Timelo Investment Management. JF, it's always nice to have you with us. Now we're into June, and after what was a rocky ride in May, we're now just getting word that Microsoft has a cautious outlook today. They're such a big technology company that one wonders if this story of whether or not we've seen a bottom, whether valuations are more compelling, whether that's on pause when you have big companies that have to provide an update which is fairly cautious. What's your general assessment of what's been happening in the market?
Yeah, no, I don't think the tech stocks and just generally the COVID benefactor, the people that benefited from COVID are done with bad news. Microsoft obviously benefited hugely. People went at home, upgraded their home computer with software and all sort of other software to protect security. So I'm not surprised to see that from Microsoft, and I expect more news like that to come out.
What's your general outlook for the equity markets? I mean, we have seen a bounce off the lows. Do you think that those lows will hold?
No, I don't think they will hold. It could hold for a few weeks or even a few months. But, I like to look at what happened in 2000 when we had a big bubble in tech stocks. And, we've had many big declines and then followed by big, bear market rallies. I think that's what we're going to have, big declines followed by rallies and until the market is probably down a lot more. And again, I'm not bearish on everything. It's just the very expensive tech and especially the unprofitable tech type of stocks. When you say down a lot more, maybe you can sort of tell us what markets you're talking about and quantify that a little bit. Yeah, just generally speaking, I'd say NASDAQ. I'd say also like unprofitable companies. There are tons of them. Like Netflix is very profitable. I mean, there's so many of them, and people still look at these names with a multiple to sales, which because they have no earnings, and also many of these companies, if not most, exclude a good portion of how they pay the employees through stock grants, and they exclude that from their calculation. So I just think there's a lot of downside, and like every day we look at some of these companies that are down already 50% or more, and we find them very, very expensive. Are there areas of the market that you see less downside or you don't see downside, like you see opportunity by comparison? Yeah, no, it's 100% true that I find also a lot of bargains. That's a very unusual market where, in my view, we have those two extremes, extremely expensive stocks and extremely cheap stocks. And energy, despite having moved a lot, are very, very cheap. Stocks are very, very cheap, even at $80 oil. Most of those stocks are very cheap. We like housing stocks in the U.S. Everybody hates them, so those stocks are very cheap. Lumber stocks are cheap today, despite the lumber price going down. And there's many also small cap stocks, very cheap, very easy to find cheap stocks. I want to talk about some of your stock picks, but before we get there, since you talked about housing, obviously we're watching this higher rate environment. The Bank of Canada just raised rates by 0.5 point yesterday, another jumbo hike. So back to back on that front, there are expectations just based on the messaging from the central bank that we're going to see more aggressive action, maybe, and we heard this from one of our guests earlier, a 75 basis point hike. How would you rank or rate what the Bank of Canada has done, just in terms of how they are approaching the inflation issue, how they are messaging to the markets? Yeah, I'd say this is the same for every central bank. They're behind the curve by a lot. They talked about the inflation when it was rising as transitory, and obviously that wasn't true. And they're fighting. So they will keep increasing rates. That's the short term, though. That's the short end of the curve. The long end of the curve could actually decline if they keep increasing rates because it will hurt the economy, and people will anticipate that, and the long yield could actually come down. Okay, so let's get to some of those individual names that you do see opportunity in the market with right now, and some of the reasons for that. A few names here. Wajax, WJX on the TSX is a stock that has been one you've liked. Tell us a little bit more about why. Yeah, there's a new CEO that we really like. This gentleman comes from an acquisition the company made, and now he's the number one running the company. Great track record. The stock trades around 8.5 times earnings per share of this year. We're half through the year. Most of the earnings is free cash flow. We expect also acquisitions, and this guy has done that in the past. So we expect, therefore, lots of growth. And also they benefit from the oil boom. They benefit from the construction boom, and the immigration. We have high immigration in Canada. So it's all looking good for Wajax.
Profound Medical, PRN, another one you like. How come?
Now, this is a very kind of special situation. I mean, they have a new procedure to treat cancer in prostate. Like there's like 3 or 4 billion prostate, walking around the planet. So apparently when we get old enough, everybody has a problem with the prostate. And they have basically a procedure that is saving manhood, I call. So like if you have a surgery, some people would lose they lose some capacities. But with this new procedure, the numbers of fully recovered is way, way, way better. And I just think over time, they'll be able to become the new gold standard for treatment of cancer and the prostate. And the market cap is very, very low. The CEO also has been buying shares in the last few weeks, which to me indicates that maybe things are picking up in their business.
One final one, Crescent Point Energy, CPG.
Yeah, well, I like it just because I'm bullish on oil first, but CPG is basically the cheapest oil name in Canada and maybe one of the cheapest in the entire world. We expect good news out of them in the next few months. The company could be debt-free before year-end or early next year. And I think there's a possibility for a big multiple expansion just because the multiple is so low compared to the others.